Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income pick. If you want to read more about what John writes on a regular basis, you could head to incomeinvestors.com. You can find the link to the website in the description below. During the period of rising interest rates, share of real estate investment trusts, or REITs for short, tend to encounter major price deterioration. That's because REITs generally have significant capital expenditures that are vulnerable to high interest rates. But with the expected decline in the interest rate beginning as early as March, REIT stocks have been rallying lately, and there's likely more to come. That's the case with Service Properties Trust, traded on NASDAQ under symbol SVC. The small cap REIT has more than $11 billion invested across two major classes: hotels and service-focused retail net lease properties. John?
Yeah, and according to the most recent data, Service Properties owns more than 221 hotels, and that totals more than 37,000 hotel rooms. And those are located in the US, Puerto Rico, and Canada. It also owns 761 retail service-focused net lease properties, and that's comprised of more than 13 million square feet. Now, to put that size in perspective, that's equal to more than 225 NFL football fields. Now, Service Property stock has been hurt by weakness in the hotel and retail space, but things have been improving. My view is that it might be an opportune time to look more closely at Service Properties Trust. SVC Stock's price is just north of its 52-week low of $6.84 per share and well below its range high of $11.50 per share and its 5-year high of $28 per share from February 2019. At its current price level, Service Property stock could be a compelling opportunity.
Why such a bullish stance on Service Properties Trust?
Service Properties has generated revenue growth in 4 of its last 5 reported years. This exception was 2020, which was during the course of crisis. The company's revenues have steadily been recovering, but the potential for an economic slowdown in 2024 could cause some stalling in its revenue growth. Analysts estimate that Service Properties will report flat revenue of $1.86 billion in 2023, improving just slightly to $1.9 billion for 2024. Now, moving to the bottom line, or profitability, Service Properties has yet to return to the same level of profitability it had before the health crisis. An encouraging sign was the significant narrowing of its diluted earnings per share loss in 2022 compared to 2021 and 2020. Now, analysts expect Service Properties Trust to continue losing money. Analysts estimate that its loss narrowed to 14 cents per diluted share last year, and that loss will actually increase to 24 cents per share in 2024. Going forward, the company will need to continue streamlining its costs and move towards profitability.
What about its dividends, John?
Service Properties Trust, the fund statement, shows consistent positive free cash flow in each of its last 5 reported years, including a strong rebound in 2022. The company uses its free cash flow to pay dividends, and it's been good to shareholders, having paid dividends for 30 consecutive years. Now, the company was hurt by the 2020 health crisis, and that led management to make a significant, actually pretty massive cut to its quarterly dividend from 54 cents per share in the first quarter of 2020 to just 1 cent per share in the second quarter of that year. Now, in a positive development, Service Properties Trust increased its dividend to 20 cents per share in the third quarter of 2022 and has kept at that level since then. Now, as of this recording, Service Properties stock dividend translates to a forward yield of pretty significant 10.25%. Now, as long as the company's free cash flow continues to be positive, I expect its dividend streak to remain intact. The company's dividend coverage ratio is a healthy 3.8 times. Moreover, based on the 38 million Service Properties Trust paid out in 2022, the company has the financial room to make a slight increase to its dividends.
John, thank you so much for your insights. Based on the information provided, we think SVC stock is worth a look for income investors who have patience to wait for a turnaround and in its share price. Based on this information, we think SVC stock is worth a look for income investors who have the patience to wait for a turnaround in its share price. In the meantime, investors can benefit from Service Properties Trust high yield dividend. Note that Service Properties stock has an institutional support, with 352 institutions holding 79.3% of outstanding shares as of this recording. BlackRock Inc. has an 18.4% stake in Service Properties Trust, and the Vanguard Group has a stake of 16.1%. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.